Hello, hello, hello. Happy Friday, everybody. It's REI Happy Hour at 5. Sorry about being a little late, technical difficulties, but it is Friday. I know everyone out there must be happy. I know I am. Danny is off this Friday, so we got Lewis with us today. Hi, Lewis. How are you?
Hey, what's up, everyone? I'm doing pretty well, Ken. Just very, very happy it's Friday. Couldn't have come any sooner for me, but just glad to be here.
Yeah, man. I tell you one thing. The week has gone by fast, but I feel like this summer, it's like now that like July 4th is over, we're in mid-July. Like before you know it, it's gonna be fall, man. But I
I
mean,
know.
I like fall. Fall is my favorite time of year. So I don't get depressed when summer is coming to an end. So I'm good with that. But hi everybody. Again, thank you for joining us, and everybody out there that will watch this when it's recorded. We appreciate it. I think I'm not 100% sure, but I think we're on episode 21. It's either 20 or 21. I'm not 100% sure, but we're right around that area. So thank you for everybody for watching. Now we get right into it. So we don't have any guests today, so it's just gonna be Lewis and I, and we're gonna talk a little bit about what we do. We're going to talk about the company we work for, which is Campos Capital Group, and I'm also the director of LendingHwy, which I'm going to discuss a little bit today. 20 episodes. We feel like sometimes we got to go back and just kind of let everybody know what we do and the benefits and values that we could bring to real estate investors out there when it comes to leverage and being able to scale and things of that nature. So. Again, Lewis, thanks for joining us. I'm gonna let you go first. Let's get into my favorite part of the show. Let's talk about what you're drinking, and we'll
All
go from
right.
there.
I got a very Latin American Modelo with
Oh, all right.
michelada, orange
Nice.
flavored. It's also what I use for my carne asadas, which we haven't won this weekend, that's for sure.
Oh, really? So wait, you marinate it with it?
Yeah. Yeah, I'll use this and I'll toss a little bit of that Lori's lemon pepper seasoning in there. Tastes pretty good.
Oh, okay. That's good to know. Good to know. You're gonna have to send me that recipe. I'm gonna have to try that out.
Will do.
All right. So what I'm drinking, I am drinking bourbon. So I just opened this up. This is actually a gift. It's from Lost Whiskey Club. They're actually out of Virginia. Never had it before. It's a very small, skinny, tall bottle. But I did have a sip before we started. I'm gonna take a sip now. But it's actually, for being from Virginia, it's actually pretty damn good. And everyone
Good.
knows I love my bourbon. So salute everybody for that. But so let's get into it. So like I said, we're gonna be straightforward today. And we're just going to talk about a couple things when it comes to LendingHwy and Campos Capital Group. If you guys have any questions, whoever's watching and listening to us, feel free to comment in the comments, and we will try to answer your questions to our best ability. That being said, I want to hold on one second. Sorry. Sorry, got interrupted by our producer. But going to talk about LendingHwy. So if we could throw up, I want to talk about the benefits of LendingHwy, what LendingHwy is, and then we'll also go through the rates and what we're offering. So I want to also say thank you and shout out to Mr. Dennis out there. He says, pour me one. You know what? I'll pour a second and have another one for you. And from what I heard, you were at visit our office yesterday, so hopefully that went well. And I think you've met with Maria, so that's awesome. So can we get the benefits information up so I could kind of just go through that a little bit and talk about LendingHwy and what that option is for everyone out there. Let's see if it comes up here. Let's see. We having technical difficulties. Forgive me, everybody. we had Wi-Fi issues before we started, and now we're got it up. So first I want to just talk about what is LendingHwy. So LendingHwy is a capital fund. So it's really the money that we gather to be able to lend out to our clients, our partners when it comes to investors out there. Why is it beneficial? I'm going to talk about why is it important, why is it of value to do it. So whether you're an investor or you're not an investor, if you're just looking for somewhere to diversify your portfolio, spread your money out, put it into different things, this is a tool out there for you to be able to make a good, rate on return, but also, know that you're actually helping someone out when it comes to their investment dreams and goals and helping them with a project. It is for short term only. Okay, so we're not funding long-term loans. We tend to fund 12 months or less. So they are short-term loans that we are funding off the capital fund. But anyways, so if you got, I like to use examples. So I'm going to get into the rates in a minute, but just to kind of give you an example. So say you're out, you got money sitting in the bank. You got a couple 100,000, you got 100,000, 50,000. It doesn't matter the amount as long as it's above 50,000. As long as you have that, okay, and it's just sitting there, the bank, yes, the rates have gone up all over, right? I know I was looking at some banks just the other day. You could do a CD and get between 4.5% to 5% on a 12-month CD or 18-month CD. So the rates have gone up in your commercial banks, in your retail banks. But that being said, people don't think about inflation. Okay, rates don't mean anything unless your rate is above the inflation rate. And right now, we all know inflation, right? We feel it at the supermarket. We feel it everywhere. I mean, everything has gone up in price in the last year and a half, 2 years. So this tool gives you the ability to be right at inflation or higher, so you're making real return on your investment, real return on your money, and you're helping people out. So just to kind of see, you can see this flyer here, and I already kind of talked about portfolio diversification. So that being said, whether you want to put all your money in one basket or you want to, spread it out, this, either or, this is a great opportunity. So there's very little risk, so minimum risk. And what do I mean by that? So what I mean by that is, okay, it's secured by real estate first off, okay? So it's not stock, right? We all know stock market. Stocks are like a roller coaster. They go up and down. You have to play the long game to really see, a really good return on your investment and to make some money. Where we all know real estate is probably one of the most secure things out there, right? So it's secured by real estate. So that's awesome. What makes us different? You might be online a lot and you might see, advertisements for other capital funds, invest with us, get a, 15% AYP or something like that. And our rates are very competitive. But the nice thing about us is we have no monthly fees or no managed fees. Most other capital funds out there, they're going to charge you managed fees, okay? And we're not going to do that. So you don't have to worry about that. Obviously, the other part is higher returns, right? You're going to get way more than you're getting at a bank, but you're going to also have that security knowing there's not that much risk. I already kind of talked about this. Your return on investment is ahead of inflation. So that's something that you should always be looking at when you're looking at investing is the return on investment higher than inflation? Because that's when you really know you're making money, right? And this is a big one too. No long hold periods. Okay, so most of the time when any kind of investment, but let's just talk about capital funds since it's closer to apples. So other capital funds out there are going to make you keep their money with them 5 to 7 years. Okay, that's a long time. Now, it's a great tool. I feel it's still a great thing to do, but we have no long hold periods. So really, when you deposit your money with us to use to help other investors out there, We pretty much have a grace period, for the first 90 or I think it's 60 days actually, where we ask you to keep the money there so we can use it. Most of the time it's going to be used probably within a week or two at the most, but it's going to be used very quickly because we have tons of clients out there we have tons of people in the pipeline with pre-approvals. So this money is used really quickly. So that's a good thing. The only time you can't take out your money is when it's being used. If it's being funded for a actual property in a project, you can't take it out then, but you could take it out once it's over. So for all the investors out there, the average, is probably on a fix and flip. You're looking at like 6 months. It could be less. It could be a little bit more. But usually, if your money's held up, you got to know that you're probably not going to be able to touch that money for at least 6 months. But you do have that peace of mind knowing, hey, when it's over, you can take that money out if you really need it. Now, obviously, we would recommend you keep it there because if you keep it there, every deal you do, you're either going to get paid on your interest monthly, or we could compound it and roll it back into the account. Now, obviously, that compound is not going to be used on the deal that's being done at the time because those funds have already been set aside. But you could get that to where the next deal comes over, we can use that money, and then you're even earning more and more and more. So those are the benefits, okay? And I think the peace of mind and the thing that can kind of hit your heart is you're actually helping other people out there. It's not like a bank. When you invest with a bank or something like that, you don't know where that money is going. You don't know who it's going to be used for, who they're going to lend it to. With us, you know where your money's going. You know what it's going to be used for. You know it's helping someone else out. So always keep that in mind. And that's it when it comes to the benefits. Now, if I could get the rates up, I want to talk about the rates a little bit and go through them. I think these are awesome rates. We actually just changed them, and they went up a little bit. So this is, some big news. I know I've shared it on a bunch of groups and on my Facebook and my LinkedIn and things like that, but this is huge. So everyone that's watching, these are the rates. So they are tiered, okay? So, you're starting at about 8%, 50,000 to 74,000, which is still an unbelievable rate, right? I mean, you're not going to get that at a bank. You're not going to get that, anywhere. And you're not going to, and like I said, you have the security of it being secured by real estate. Now, it keeps going up, as you can see, 8.5%, 75 to 150, 9%, 151,000 to 300, 9.5% to 301,000 to 500,000, 10% at 501,000 up to 750,000. And then the big one there, 10.5%, anything 751,000 and up. I mean, those are big returns, right? And the peace of mind, like I said, is the real estate part too. Okay, it's secured by real estate. For everybody out there that wants to learn more, we could get into the weeds and we could get it more. If you ever have any questions, there's no fee to just have a conversation, right? It's free to talk to me or Lewis or anyone else at Campos Capital Group and LendingHwy to discuss. But there are some security blankets that you could do with this. We make sure when these contracts are signed, they're completely vetted. We've been doing this for a long time now, and we've had a lot of experience, so we know what a responsible client is and what's not. You can look at the deal. You can have it where you don't want to be involved at all. You don't have to be. You just want to see that paycheck. You just want to see that return. That's fine. Or you could be involved. You could see the house. We could send you pictures of before and after. You could be updated throughout the process if that's what you want. So there's a lot of different levels to this when it comes to how much you want to be involved. We can also discuss how we secure it with you in case that there's any defaults. It's a very secure thing. We have a process and contracts that are put in place that gives us the upper hand when it comes to making sure we are secure in lending these funds. So if you have any questions, you can email me at Kenneth@camposcapitalgroup.com, and then my phone number is 980-316-4549 is my direct line. But before we move on from LendingHwy, Lewis, I don't know if you have any thing you want to add?
Well, I think
Highway?
I was just kind of listening, having a few drinks of my beer right here. While you kind of, I don't think you left much for me to talk about. You kind of covered it pretty well. Um, but yeah, I mean, it's a great way to keep your money moving. Obviously, when it's in experienced hands, you're going to get the most out of the best results there. So, give us a call when you have questions, like to get some more details. We'll get in the weeds for you and pick out that information for you.
Perfect. Awesome. So that's what I wanted to talk about. Again, give us a call. There is a lot more that goes. This is an overview of LendingHwy. So if you want to get the details and all that, just give us a call. We could tell you how everything works, the process and all that. So that's LendingHwy. What I want to kind of transition into next is we just want to talk a little bit about Campos Capital Group, right? That's where Lewis and I work. We want to just kind of give an overview of, who we are, what we do, how we work. And that's really it. Like I said, we're going to keep it simple today. Probably every 20 episodes, we're going to do this just so everyone kind of is reminded of what we do. So Lewis, I'll let you take it from here for a little bit and just kind of tell us a little bit, of Campos Capital Group and how we work. And, I'll give my 2 cents into.
Cool. So, we're basically a combination of a hard money lender. We're also a broker as well as a direct bank. So 3 different ways of lending when you're looking for some capital, when you're going in on your investments. One of our favorite ways of lending, actually our best way of lending, is through our direct lending source. So basically we have our own funds, our own capital that we can lend out. Come in, we have expanded consideration when it comes to your qualifications. Leverage is highly considered in these matters. So whenever you're coming in and you're like, hey, you know what, I have a few notches in my belt, and you want to get that extra consideration, we can do that for you. In cases where, let's say, you just don't quite fit certain criteria, and we got to get a little bit more creative, we can go ahead and reach out to one of our many different affiliated banks, look at some of those guidelines, look to see what's going to be the best fit for you. And at that point, we can basically find you the best, the best characteristics in the loan for you. So that essentially we just get you the best pricing. We're always looking to get you the best deal, not what's easier for us. That's our way of looking out for our clients. And so the final way, the third way that we lend, is when we have to get really, really creative and just kind of move fast. We go ahead and reach out to our capital groups, which is essentially where, if I'm not mistaken, LendingHwy would come in, and that's where your funds would be actively introduced into the investment side, and you can see your returns there. Like you said, no long-term holds, so bring it in. And how long would you say that these holds typically take, or how long would an investment on average would be in that invested process?
I would say the average is probably 6 months, right? Is probably if I'm understanding what your question is, it's usually 6 months. I mean, obviously it could be less, it could be a little bit more, but I think 6 months is the
6 months.
Cool. Yeah.
So there it is. That's the other way that we can basically, what I've seen from my time here at Campos Capital, and just to inform everybody, I come from the traditional side, so I typically see things a little bit differently, which is why I came to the investment side of things. It's kind of like they used to call the outside loan officer the Wild West of the mortgage industry, but I believe this is a true Wild West. Being able to do deals that you just would typically turn down at some of these traditional lenders. So, when it comes to these transactions, when you have a quick close date or you're a few days away, you got to get a foreclosure stopped and all that good stuff, and you're trying to get into this property, we got that hard money lender that's going to come in. We'll come in and we'll save that deal. At least that's been my most recent experience with. with that avenue of funds. And I'm going to be honest, I had a couple of these before we started the show. But
I wish I had a little bit more before we started.
Yeah, I fall off track a little bit there. I had a good week, so I was celebrating a little bit early today.
Hey, it's good. Yeah, man. I mean, so to give kind of people the perspective on what we lend, right? So all those three buckets can be used for multiple things, but when it comes to what kind of programs we offer, right? So we offer short-term loans. So we're talking about your fix and flip loans, okay? So we're going to give a percentage of the initial purchase, which is the property, okay? That depends on a few factors, okay? It could be, we're going to look at your experience. We're going to look at your credit. We're going to look at the actual margins, of the property, the leverage, how much return on investment is there? What are those, what is those margins of the, ARV to, the actual cost? So all of that is factored in to what we're going to give on that initial purchase. Okay. So obviously we hear 80% all the time, right? So I'm just going to use that example. So say we're going to give you 80% of that initial purchase of that property. And then with the fix and flip loan, we're also going to give you 100% of the rehab value. Okay. So what that pretty much means is you're going to have your costs covered for the rehab at 100%, and we're going to give you a majority of what you need for the purchase. Now, how does that work? Okay, because I think sometimes this can be deceiving. When it comes to the rehab, we're not just handing over that money. Okay, it's draws. So if you've ever been in construction or you've been a builder, or, you've seen houses. So it's the same concept. So there's draws, right? There's sections of the house they build, and they take draws to get that money. It's kind of the same way. So it's not 100%, but most of the time, it's a refundable draw. So you have to have the money to start the actual rehab. Okay. So, and then we refund those funds. So that's a fix and flip loan. So we do fix and flip loans. We do them on single family. We do them on multi-unit. So it's not just single family. So it could be, a townhouse, single family, multi-units, any of those. Okay. We also do long-term. So those are DSCR loans, okay? Debt service coverage ratio. And that is based on the actual cash flow of the property. So pretty much what they're doing, the way we figure out what we're going to be able to lend you, we're still looking at margins, but most of it's coming from the actual, once you get what your mortgage payment is, taxes, insurance, if there's an HOA, whatever, okay? And then we see what your rent is. Okay, as long as you're making money and you're over a 1.1%, okay, that could be tons of different amounts. It just depends on the situation. But as long as you're over that 1.1, we can lend on that property. That means you're cash flowing. That means you're bringing home money every month on that property. Is there cases we could do less? Yes. Obviously the more the merrier. That's just better for you. But there are cases that sometimes we could do less. But 1.1 is actually a good place to kind of be when you're an investor and looking, and if you're doing your own math and trying to figure out what it is. A good investment properties, you probably don't want to go less than that, right? To be able to make a good amount of return every month. But so that's their DSCR long-term loans. Okay, we can do that on, again, single family. We can do it on multi-unit. I've done a few multi-unit for a couple of our clients recently, and those are great cash cows, man. I mean, especially right now, rents are going up, and a lot of times your mortgage is one thing, and you're bringing, you're getting over $1,000, on a unit. So sometimes that can be very beneficial depending on the situation and how much you paid. So we have your long-term loans. We do short-term rental loans too. It's very similar to DSCR. Some of them are priced out the same way DSCR are. And then some of them are based on the actual history of the Airbnb or are given like an estimate. For more information, you could definitely give Lewis or I a call on that. We also do ground up construction. So ground up construction loans, it's actually hot right now. We've had a lot of calls. We've put in some applications recently. I feel like there's a push for that recently, but there's a lot of that you could do too. So that being said, those are pretty much, for the most part, that's the type of loans we do. And yeah, I mean, Louis, I don't know. I'm taking up all the time. I don't know if you want to add something.
It's all good. So there's one of my most recent transactions I've worked on was DSCR loan, and what some may not know is that there's a lot of different features where you can kind of personalize that loan to your particular situation. So to keep that cash flow going, and it could be a number of things. And when you make these adjustments, you can factor in how long you're going to be keeping the property, if you're going to be looking to sell it soon, if it kind of just, pulled it off the market, you're going to keep renting it because rents are up. There's different factors that you can bring into the terms of those loans to help facilitate and help provide a better, basically cater to that particular situation of that property. So just an example, if you're going to be looking at something where you really need to get that cash flow, you want to have those funds flowing. We have different options where you can go interest only. If you want to really work down that equity, there's options where you have principal and interest involved, and you have the different terms for prepayment penalties as well. That can be adjusted according to, how long you plan to retain the property. So all of those factor in, and whenever you have questions in regards to that, or feel like maybe, you can't find a loan that works for you, give us a call and we'll look into it for you.
Yeah, no, it's good information. The last thing I'll say is I just want to kind of go over the process with everybody. And it's an overview, right? I'm not going to get into the weeds, but let's start off with, if you have a property, like, how do we work? Actually, let me step back. Sorry. So my favorite thing I see online, I know most people are on groups on Facebook and all that, but I love when people put online, what are your rates? What are your, tell me your rate, or tell me your terms. It's not that, easy, right? So the best thing to do is to give us a call, to email us with your property information, right? So I'm not going to go through every scenario of everything, but let's just think about a fix and flip right now, right? We're going to want the property address. We're going to want to know your mid FICO score. We're going to want to know how much experience you've had. We're going to want to know the purchase price of the property. We're going to want to know your rehab amount. And then we're going to want to know your ARV after repair value. Okay. So once we have that information, we can usually get you either pricing immediately, or we just need a little bit of time, if we have to go outside and look at one of our lending partners. So it just depends, but usually we can get you, pricing back pretty quickly. So once you do that, right, you put a contract on the house, you like what you see, you want to go forward. So then we're going to collect documents. Okay. So we're not going to, at this point, the time clock hasn't started yet. So we're going to collect all of the documents that we asked for, which is usually your entity docs, your bank statements. We're going to get your driver's license or your ID information. We're going to get, a couple other things like your insurance information, your title company you're using, things to that nature. Once we have that and we got a signed application and we have all that, that's when we submit it to underwriting, or to our processing, sorry. And at that point, they're putting everything that we send and they're reviewing it, making sure it looks good. And as long as it looks good, within that 24-hour period, we're ordering an appraisal. Okay, that's pretty much when the time clock starts. Okay, so once that happens, everything's really going to rely on that appraisal, right? Because we're going off the numbers that you gave us. Hopefully, we look at comps sometimes, but hopefully you did your research. The comps are good. Everything looks pretty strong. And then that appraisal comes back, best case scenario, it's the same price you said it was, or it's more, right? And at that point, the underwriting really takes place. And then that's when we start talking the title, and that's when we start doing everything. And then we're trying to close within that 5 to 7 days after that appraisal comes back. So that kind of gives you a little bit of an idea of like the whole process. but it is a lot quicker than your conventional. Usually you're looking at 3 weeks. If you're lucky, maybe less. Or, sometimes it might take a little bit longer, but usually the average is around 3 weeks, where on your traditional side, you're looking at about 45 days. So you're looking at about a month and a half. So that's going to be a big difference with that. So I just kind of wanted to discuss the process with a high overview of what happens with that. I don't think we're going to go into much more today. Louis, I don't know if you have any last words or anything for today.
No, I'm just gonna sit back. I'll finish my beer here. And, yeah, that'll go.
It's too funny. Well, I want to thank everybody. We kept it right at 30 minutes today. We will have Danny will be back next week. We do have a guest for next week. We will just, look online, look on our website, look on Facebook. We will be putting out information on our feed for next Friday. So everybody, happy July, happy Friday. Everyone have a great weekend, and see you next week. Bye now.
See y'all.